Hey guys, it's Enny, aka the Knock Trader, your friendly neighborhood swing trader, back again with another video. So in this video I'm going to be talking about falling and rising wedge patterns. So I was googling falling wedge patterns and I wanted to see what patterns it keeps showing, and a lot of the times it would show stuff like this. So falling or rising wedge will show something like this. Now this shows you that as it keeps rising, for a rising wedge, it could either break to the bottom side or the upside. But there's something really pivotal that I see in real life, but it doesn't show you in the patterns that are shown in different books on trading patterns. So I thought I'd discuss it a little bit. So these are some patterns I drew on paint. Now for rising patterns, so this one I've drawn is like a parallel wedge. So these wedges mean that the support and resistances are converging to one point to make a sort of triangle. And this is like a parallel wedge because the bottom and the top is pretty much parallel and meets in the middle. So for a rising wedge, as you can see, it goes up, then down, then up, then down. But what it doesn't show you, that's a lot of the time that I've seen happen in real life, is that even if it's a bullish it's a bullish price, so it looks like the price is going to go up after it breaks out in this wedge. Sometimes it will make a false breakout to the bottom side outside of the wedge and then carry on going up. And if you just followed what the books told you, you'd assume that it was going to just carry on going down based if it breaks out of the wedge. So what I like to do a lot of times is that even if I see a wedge and it looks like it's a bullish wedge forming, so how I know that is that if it entered from the bottom side, started converging to the point, and it looks like it's going to break to the upside again, I would wait for it to make a false breakout to the downside, and then start going up. If it makes a false breakout to the downside, comes up a little bit, then carries on going down, then I know that it's the price is going to fall and it's a bullish signal. So So the way to for a bearish signal, I would wait for it to break out, come back down, and then go down again. If it doesn't do that, if it carries on going up, then I know it's a bullish signal. So this is a key indicator, and you wait for it to make an action afterwards. You don't just take this breakout to mean that it's going down, because then you might get burnt and it might be a false flag and start going back up again. So that's something really important. And it works the same way the other way around. So if the price is falling, makes a wedge, it may break out to the upside and come down. So you need this area is the pivotal point, because it can either start going back up again when it hits like the wedge and uses the wedge as a resistance line, or it might break through it and carry on going down. But you need to wait and see what action is going to be taken here. Let me show you something just to kind of give you a real life scenario. This is one that I traded a little bit earlier. So I identified the wedge signal, as you can see here, and it did exactly what I said, what I told you about earlier. So it came up, went down, came up, went down. Obviously it's not as pretty as but this is real trading, so it's never going to look as pretty as it does in the books. So I assumed it was going to carry on going up, but I knew that there's a possibility it could break out to the downside, and that's exactly what it did. It broke out to the downside, broke out of the wedge, and then started carrying going back up. What it does from there is it can do whatever it wants, so you can't assume that's just going to carry on rising forever, but at least there's a lot of pips that could have been gained just from waiting for it to break out to the downside, come back up, and then rally up. And look what it did, it rallied up, came back down, used the top of the wedge as a resistance, as a support. The old support becomes a new resistance, so it became a new resistance, and then carried on going up. So what I would have done is waited for it to come back out, wait for it to break up to the upside of the wedge, and then when it came back down and used the previous resistance as a support, I would have entered here and then rode it up for quite a lot of gains. So this is just a real life scenario of it. Now back to paint. There's also other kind of signals that here, like if the wedge is not always going to be parallel. Sometimes it's going to be curving upwards or curving downwards, but the same principles still apply. If it's coming from the downside and it's bullish and it's going up down, what I'll do is that wait for it to break out, then consolidate. I always wait for the consolidation. You see me mention this in all my videos. I wait for it to break out, consolidate at the old resistance, and as it becomes a new support, and then this is where I'd enter. I'd enter at this area here. This kind of just gives you like enough of a signal. This is the area I'd enter, and then as it carries on going up, then I can. And it's a great place to enter because if you're pretty confident now that it's become a new support here, you can set your stop loss just below that. So you can set your stop loss just below that here, and then it's a tight stop loss. So that means the stop loss can be really tight, so that your risk to reward can be pretty good. Because if your stop loss is tight and it starts making gains, you can just keep raising it as the price goes up. So that's kind of a strategy that I employ, and it works both ways, whether it's going up or going down, whether it's a bearish or bullish signal. You can use the same system just in reverse. So I hope this has been a useful video. I'm going to make more like these on the different chart patterns. If there's any ones that you think I should cover, leave a comment in the comment section below, and I'll make a video on that as well. Not Trader signing out.